Welcome to Perusing's Appraisers on Purpose podcast. Our podcast showcases inspiring appraisers and professionals from the industry who are leaders in their field. How did they get to where they are? What have they learned along the way? What can we learn from them? Your host is real estate investor, entrepreneur, and appraiser, Michael Hobbs.
Well, welcome to another informative, exciting, and engaging episode of Perusing's Appraisers on Purpose podcast. I'm your host, Michael Hobbs, and excited to have you joining us. You're going to get another great opportunity to hear some stories and a little bit of life and professional experience from one of our peers. But before we jump in, remember, you got to do what all you can do, and that is you got to hit the like and subscribe button because you got to send a signal. You got to let people know that others can enjoy this as much as you do. And I want to thank you in advance for doing that, because only you can do what you're doing. And in the meantime, I want to thank in advance our guest, Jim. Thanks for joining us. Really appreciate you being part of the podcast.
Thanks, Michael. Appreciate the invitation and the opportunity to join you today.
Yeah, I appreciate it. It's always fascinating. No two people's life stories and professional experiences are the same, even though there might have intersections. And I'm sure it'll probably be the same for you, because people want to know, Jim, were you born this way, or how'd you get into the valuation and appraisal profession?
Well, I wasn't born this way, but I do come from an appraiser family.
Really?
Yeah, my father was a pilot in the Air Force. He flew B-24s. He was a B-24 pilot in World War II. He was a MASH helicopter pilot in Korea. He flew Air Sea Rescue in England. He flew RC-121 Constellations in the 50s up and down the East Coast. And he was in Vietnam as a tactical squadron control leader. And he retired in Colorado Springs.
No kidding.
And, back in 1973, I believe it was. And I was too young to get in the appraisal business at that point. But I started going out with him, doing inspections. He did a lot of VA work, did commercial work as well. And I started going out and holding the dumb end of the tape when I was 10, 12 years old. And then got into the family business while I was still in college. And yeah. And then when I graduated, I was a junior, wasn't quite sure what I wanted to do. I was considering going to law school.
Yeah.
But he could tell that I didn't have a lot of focus on exactly where I was going. So
do many people have a lot of focus?
Except I except that I wanted to go to Europe and backpack around Europe for a summer when I was in college. And so I went to him to see if he'd lend me the money to do that. He said, on the condition that when you come back, you'll spend the rest of the summer and the rest of the semester really trying your hand at the appraisal business.
Oh, wow. So it was a negotiated agreement, as they might say.
It was, yeah, well, or bribery or whatever you want to call it.
That's another way to look at it too.
I think he realized he was probably going to be footing my bill for a little while. Regardless, might as well get some real work out of me. And I fell in love with it, and really got the bug. And when I started in Colorado Springs, it was during the savings and loan crisis. So it was mid to late 1980s when I got started, and Colorado Springs was one of the epicenters, if you will, of the S&L crisis, or what we used to call the oil patch crisis, because so much of it was focused in Texas, Oklahoma, Colorado. And so the first year and probably 2 years, most of the assignments I was doing, most of the appraisal assignments were foreclosures.
Oh,
And because there were lots and lots of foreclosures out here. In fact, the largest take back that the government had of a parcel of land was the Banning Lewis Ranch out east of Colorado Springs, I can't remember, 20, 30,000 acres that had been taken back. And so we were, right kind of in the middle of that whole issue. But for an appraiser, it was great because when you're doing foreclosure work, you don't have to set an appointment. You go out and look at the property when you get to it. We were 6 weeks out
Mhm.
at some points in terms of our workload. Now, this was back when you'd go out, write up the appraisal, hand it to the secretary, and she'd type it up, and you'd move on to the next assignment. It was prior to USPAP. It was prior to in any of the regulatory system that we have now. But it was at the very beginnings of the regulatory system, and my brother was also working with my dad, and he eventually got his MAI and got very involved in the regulatory side of things in the state of Colorado as Title 11 was forming, and that really gave me an interest in doing something
Yeah.
more than doing appraisals for the family business.
Mhm. Man, that's amazing. How did it change from back in the day when you were at the dumb end of the tape measure to coming back from exploring, another other countries? How did your perspective change, or what did you start to gain some understanding of that was just different from, helping dad out, so to speak?
Well, it was that trip, and I'd coming from a military family. We had lived in Germany. We'd lived in South Carolina before I was born. My parents lived in several different countries, England and so forth. But so I've always enjoyed traveling. But that trip, I've always felt like taught me more about life than I ever learned at college. And we had experiences. We went to 12 different countries from Sweden to Greece and
Wow.
rode the trains and made an error in our travel coming back from Sweden and ended up in East Germany. And for those who don't remember, back then the wall was still up and there were 3 corridors to get into East Germany in the West. And if you were a Westerner, you had to take one of those corridors. Well, somehow we got on the wrong train and ended up going on an East German train. And that was my first experience with people who don't like you with guns and having to bribe guards to get us out of the country so that we were, we didn't get in a lot of trouble. Both one of the guy's dads who was working for Hewlett Packard at the time and living in Stuttgart, Germany, he and my father said, do not screw around. They used a little stronger language, but do not screw around in East Germany because you'll disappear. We won't be able to get you out. We may not be able to help you. So, well, I'm not sure if we were more afraid of our fathers or the East Germans, but with the help of some couple of Dutch guys,
Yeah.
or excuse me, Swiss guys who spoke both German and English very well,
Mhm.
they helped us pay off the guards on the train so that we could get to Berlin, which was our destination, and then get through security. So, and I could go on with more stories about that, but just I actually got some college credit for
Really?
writing a paper on on,
Bribing guards?
pardon me?
You got college credit for writing a paper about how to bribe guards with guns?
Well, about how to, just on as a international communications class. And though what that caused, though, is me to be a lot more focused on talking to people. You know, when we spend a lot of time on the trains,
Yep.
and it gives you a lot of time to talk to folks. And it's fascinating, some of the things that the Europeans, particularly the folks that we met in East Germany,
Mhm.
their impressions of the United States, there's still a lot of those impressions are still around. Like, Reagan was president at the time, and everybody was convinced that he was going to start a nuclear war, and you know, that the most Westerners, particularly Americans, were warmongers. And so it was very satisfying to be able to walk away from some of those conversations feeling like, hey, they realize we're not as bad as they've been led to believe by their press and politicians.
Oh, that's encouraging. That's encouraging to hear. And out of ignorance, because I wasn't there at that time and haven't traveled the way you traveled, were you speaking to them in German, or were they speaking to you in English?
No, I could speak a little bit of German, little bit of French, but no, it was mostly they had to, which was unfortunate. And of course, some folks don't care for that. And I understand, you're in their country, you should be speaking their language. We lived in Germany. My dad was stationed in Germany when I was little, 4, 5, 6 years old. And apparently I spoke pretty good German because my mother talked about how at the stores and everything I would interpret for when I was 4 or 5 years old. So, but unfortunately I lost, 95% of it.
That's pretty common. I understand. If you don't stick with it, you lose it as you grow up. I've heard that from so many people. I can't say I've learned that myself, but that's what I've been told, at least. Been told. Wow, that's amazing. So you get to actually apply that kind of stuff, and then you're at the epicenter of the S&L crisis. What an amazing series of life events early on for you.
Yeah, well, I think it kind of, particularly on the appraisal side and the valuation side, working with one of the bigger appraisal firms in Colorado Springs, and we did a lot of training of appraisers and a lot of training of our eventual competition, as people
Like,
complain about. But we always thought of it as we're helping to build a profession. I never once heard my dad or my brother complain about somebody that we had trained that decided they wanted to go out and start their own company. They remained friends, they remained colleagues, and when invariably you do end up getting work if you keep those kind of relationships, because they'd come across assignments that they weren't comfortable with for one reason or another, or didn't have time to do, and you share that kind of information and resources and work, and it worked out pretty well. And then my brother became very involved with the Colorado legislature
oh,
in writing the initial appraisal regulations after Title 11 was passed, and that really sparked a desire on my part not to remain in the family business, but to see what else was out there. So I got my SRA. I'll never forget, I was eating dinner at my parents' house, either the day of or the day after I'd finished all my finals,
Really?
and was on my way to graduating from college. And the first question my dad asked is, "When are you going to do your demo to get my designation?"
Oh my goodness. Talk about jumping in the deep end of the pool.
So yeah, so I got my SRA when I was about 22, 23, and and then started looking around
Mm-hmm.
and sent out. Now this is pre-internet, all this technology. So I sent out my resume to a number of different folks, and lo and behold, I got contacted by a company called TRW. And TRW they were a big manufacturer of car parts, and they also were the providers of what was called TRW Ready, which was microfiche property records
Mm-hmm.
and plat maps and so forth. And being about 24, 25 at the time, they sent me a list of different places that they needed people.
Okay.
And I took out the old Rand McNally map and tried to figure out what was the closest place to the beach, and ended up in coming from Colorado, the beach sounds pretty good, and ended up in Richmond, Virginia, and
Good place.
so TRW was the first national appraisal management company, and they were going around buying up. Yeah, they were going out. They were buying up appraisal firms all over the country, and that's how they put together their nationwide network.
I
And
definitely didn't know that. That's fascinating.
yeah, I ended up. Well, they brought me out there as a manager, and I was talk about naive. I thought I'd been raised, by a colonel in the Air Force who is very big on ethics and very big on process and doing things the right way, and and I found out very quickly that that's not how everybody runs their business. So I lasted with around that time. I also got married to my college sweetheart, and she became a flight attendant with United Airlines, and we moved to Charlotte, North Carolina briefly, and then she was flying out of Washington D.C. So I wanted to find a place to work in D.C., and that's when I ended up with Chevy Chase Bank in
Oh, really? Okay.
1992, 93. And from there, I developed a real interest in appraisal standards, and I was able to start going to a lot of the foundation meetings. The ASB and AQB meetings were back then were all there in DC. And of course, there wasn't an online option or anything like that. There was no Zoom. So I was benefited by being able to go to a lot of the meetings in person, and that became something that I became very interested in and passionate about, and did a fairly short stint with mortgage insurance company PMI,
Oh, wow.
and then in 2000 got a job at the Appraisal Foundation. I was the first appraiser that they had hired.
Okay. Wow. So, I mean, given that you had the opportunity to start in a family business and then, you chose to exit that, what are some of those fonder memories and learning experiences that you're like, I would have never gotten that opportunity or that understanding if I wasn't there?
Well, I had the benefit of being taught by my dad, who his primary focus was on getting it right. And he taught me a lot, certainly about ethics and how to treat other people. Never ask anybody that works for you to do anything you wouldn't be willing to do yourself. And that came from being in the Air Force and flying bombers in Germany in the 1943 to 1944, and then doing all the other things that I mentioned that he did. It I had a lot of respect for him, and he always pushed me to never settle and to always try to strive to get to the top and be the best at whatever I was engaged in, whether it was appraisal or whatever. I probably would have been a pilot had I not been born blind as a bat. And he didn't, I think it was his service in Korea as a MASH helicopter pilot. He didn't want to see me in the Army or serving on the ground. I said, if you couldn't be a pilot, that was, he encouraged me to follow him into that career, which I'm glad that I did. But, he taught me to never cut corners, and just to do things the right way. And, and that was, again, before we had USPAP or the qualification criteria or anything, which at this point, having been somebody who has, been very passionate about USPAP and those things, I do have concerns that the regulatory system and things like USPAP have become too much of a crutch and impediment as well, instead of people just getting the appraisal work in the business because your clients trusted you and knew that you were ethical and knew whether you gave them the answer that they wanted or not. They knew that you were giving your best effort and that you were doing a professional job. So, yeah, those kind of experiences taught me a lot. And in travel, and I've traveled quite a bit, still love traveling. And one of the things that I always come back with is an appreciation for the diversity of the country, the diversity of the world, and how important it is as an appraiser to appreciate those kind of cultural differences, because you're going into a lot of, depending on where you're appraising, you're going to experience a lot of cultural diversity. And I've learned more and more that really has an impact on property values.
Sure does, doesn't it? I mean, these things are connected.
Huh? Yeah. Yeah. So after, while I was at the foundation, I got a can't lose opportunity to go to work for Lehman Brothers.
Oh, really?
And we know how that story ends.
Yeah. What year was that? Like 2004 or 5 or?
It was 2003, at the end of 2000. And I was there till mid 2008 when everything had started falling apart.
And then what was the opportunity that they were dangling in front of you back then?
They wanted somebody to build an appraisal department for Aurora Loan Services, a mortgage origination through the company that they had recently bought. And they were in Denver. So I'd been out in D.C. area I was actually born in the D.C. area. My dad was stationed with the Pentagon, born. But so we'd been there since 1990, 91. So we'd been there for, a good 12 years. And my parents were, getting into they were getting older, and I wanted the idea of working for Lehman Brothers, honestly, was they brought me up to New York, and I was kind of dazzled, I guess, by the bright lights of, and working for a firm that had been around for over 100 years, over 140 years, I believe, at that time. And it was highly respected, and the opportunity to build an appraisal department was pretty cool. And we were back in Colorado, so it was near my family and my wife's family. So yeah, we moved back, and it was after that well, it was while I'd worked at the foundation, and then I served on their board of trustees, was on their industry advisory council. I was chairman of their industry advisory council for a couple of years. I got to know and appreciate what the appraisal subcommittee does. And always, that's kind of the top of the food chain. And I also thought, it was just kind of a cool opportunity. And since it was pretty clear at that point that I wasn't going to serve in the military, I felt like it was a way of serving my country in a different way. And I knew the executive director at the time, and I'd gotten to know him pretty well, and some other folks on the subcommittee. And when he announced that he was retiring, I jumped at the chance, and somehow it took 3 different applications and about 3 years to do it, but they finally found their way to hiring me in 2009, and I was there till the end of 2024.
Wow, that is something else. So like that first time you got involved there, back, I guess before you went to Lehman, what kind of role and responsibility is that, having come out of the lending world, working for a major bank?
80% of all businesses fail within 5 years, according to the U.S. Census Bureau. With so many roles and responsibilities that must be managed and have nothing to do with appraisal reports, is it any surprise that it's hard to keep up, much less having a sense of peace, stability, and profitability that comes from growing your business? Given all of this, you might already be thinking about exiting your business one day. Don't miss the limited opportunity to work with Michael, a real estate expert and professional coach. He has worked with more than 300 owners and entrepreneurs to find their highest and best use by solving problems that reach their most important goals. Compress decades of learning into days by working with Michael. Michael is famous in real estate and business coaching. With his help, you can accelerate your growth, increase your quality of life, and earn more money, all while ultimately doing less. Michael helps you not just grow your business, but also find new purpose in it and in your life. If you're ready to take control instead of being controlled, contact him on LinkedIn or email him at michaelh@paru.com.
What kind of responsibility?
What kind of responsibilities did you have when if I'm not mistaken, you went from Chevy Chase over to the foundation the first time?
Yeah. As I said, there was a brief stint with PMI, mortgage insurance company, in the late 90s, but it was just, so my going to work at the foundation was kind of my big break, if you will, because it gave me more of a national presence. I got to meet, a lot of the best and brightest in the industry who were serving on the foundation boards and advisory committees and coming to the meetings, education providers, and then the regulators and all the different regulators that touch valuation and in DC and elsewhere. So my responsibility just kept kind of building, and it was a lot of responsibility at Lehman. I remember when I first sat down at my desk, and they told me, they kind of laid out, you need to do this by then, you need to be this far along by, and we're talking months here and weeks. And I was just sitting, and it was me, myself, and I. And, but that's where my industry contacts really paid off, because I was able to pick up the phone and call a number of folks that I knew who could help me out. And actually that's where, when I first was exposed to the collateral risk network,
Mm-hmm.
and I had gotten to know Joan Trice, and you were talking about the need and the lack of any kind of a real cheap appraiser network. And that's what CRN started out as, is really focused on cheap appraisers. And AMCs at that time were probably 30-40% of the business.
Mm-hmm.
A lot of people think that AMCs came along as a result of Dodd-Frank and the financial crisis in the early 2000s, and that's not accurate. AMCs have been around for a long time, but the financial crisis and Dodd-Frank and the independence rules that came out of that really turbocharged the AMC business, and then they became a big part of the CRN. But I enjoyed leadership roles. I enjoyed the responsibility that came with that, and I always liked the idea of doing something that I felt like was benefiting the entire industry. And I could have done things, I think, where I would have certainly made more money. If you're running a good appraisal business, running being a chief appraiser for a big AMC or something like that, there can be a fair amount of, it can be pretty lucrative. But that was never my driving force. It was more about trying to do something that was beneficial for the whole, for the profession, as well as the whole mortgage lending industry.
Yeah. Wow, that is absolutely what an interesting broad set of experiences you've had. And, it's one of the fascinating things that we get to appreciate and participate in from the podcast standpoint is nobody else, but maybe you and some people close by you have any sense of all the different steps and different, if you want to think of, you mentioned traveling by rail across Europe, all the different tracks you've been on, not always necessarily the same track, but maybe many times going in the same direction, sometimes going in opposite directions, and different segments in and around the industry as well. So that's quite an interesting way that it all comes together.
Yeah. And it certainly hasn't all been roses. I've had my setbacks, just like everybody has in their career. And I got laid off from PMI in the late 90s, set up my own little appraisal company working out of my house in Alexandria, Virginia.
Oh, wow.
And then, the Appraisal Foundation gig came along, and so I've been very lucky and very blessed with some of the opportunities. But of course, Lehman, I thought I was set when I went to work for Lehman Brothers, and not so fast. So,
oh man, yeah, things change, right? And just when you think it's the same, it's not the same.
yeah, but that's life, and you have to roll with the punches, and I was able to somehow, with some luck and some intestinal fortitude, I guess, and with a lot of support from my family and friends, kind of stick it out and made it to what I thought was the pinnacle of what I wanted to do, was working at the subcommittee. But that certainly had its challenges.
Yeah, that's something else. So, I mean, were you not just soured on the whole industry after your Lehman experience in 2008?
No. I mean, there were a lot of, I guess by that time, I was so indoctrinated into the industry, I didn't know really what else to do. I worked with a group of guys shortly thereafter to put together an appraisal management company, because I could see on the heels of Dodd-Frank, and this was Dodd-Frank was in the process of being passed. It hadn't passed yet, but you could see what was coming. The Home Valuation Code of Conduct had come out at that point, and folks remember that, HVCC.
Hmm.
And it was obvious that AMCs were going to become a much bigger part of the business. And a couple of my partners who had been already very successful
Sure.
financially, I won't go into names here, but we got an offer from a really big company to start up this AMC for them, and it wasn't enough for my partners, so they said no. I'll never forget getting the call. They offered us how much, and you said no. Here I am without a job. I'm like, okay, well, so much for my entrepreneurial stint.
Yeah.
And then I did end up working for about 18 months
Mm-hmm.
for a company that, and this is another opportunity for me to set up an appraisal review, and it was a forensic review company. They had a big contract with Fannie Mae and Freddie Mac to basically go review appraisals and find opportunities to force repurchases on the lenders.
Yeah.
So that was a whole new learning experience and opportunity. And unfortunately, it you ask about souring on the business.
Mm-hmm.
Now, we were looking at probably the worst of the worst, but there were hundreds of thousands of the worst of the worst, and it was sad to see some of the work product that appraisers were putting out there that ended up being repurchases for lenders, and they should have been.
Mm-hmm.
But it was during that time period when that company was called InnerThinks, and then they were eventually bought by CoreLogic, I believe, or no, First American. But anyways, it was during my time there that the job at the ASC finally came through, and
Oh, I see.
when I got that offer, I jumped at that.
Oh, amazing. Fascinating kind of stuff. I mean, do you ever consider, what if you would have had your partner accept that assignment, and, an assignment, I should say, that offer, and where life might have taken you?
Oh yeah, yeah. I think about that every once in a while, and chances are it would have been more lucrative. But I don't think I could have done anything that to me would have been as fulfilling as working at the subcommittee.
Yeah, I can appreciate that. I mean, for those people that know of it, either because they've been told about it or they had to study for an exam that dealt with it at a real high level, you just want to share with some of our listeners. Most obviously know exactly what it is, but what is a subcommittee, and why does it exist?
Sure. So at the end of as a result of the savings and loan crisis that I spoke about at the beginning of the interview, it was Congress determined that appraisals didn't cause the savings and loan crisis, but they significantly exacerbated it.
Got it.
For example, and this was mostly a commercial lending problem. And a lot of it had to do with appraisers, a lot of whom were MAIs, who were just not being ethical and in a lot of their appraisal work. For example, there were numerous pieces of land, like the Banning Lewis Ranch that I mentioned earlier, where the appraiser would put an absorption time period of like 5 years on a piece of property like that. Well, the Banning Lewis Ranch finally got fully absorbed about 30 years after some of those appraisals. So there were just unrealistic, in some cases fraudulent appraisal work being done that made the crisis much deeper than it otherwise would have been. So Congress decided appraisers needed to be licensed. And in 1989, they passed FIREA, the Financial Institutions Reform, Recovery, and Enforcement Act, which covered a lot of things in lending and finance. Title 11 of FIREA is what created the regulatory system that we have today. So it created the subcommittee. The Appraisal Foundation had already been formed back in 1987. The appraisal industry saw that regulation of appraisers was probably coming, so they wisely got together, formed the foundation, wrote the first set of uniform standards, first USPAP. And as they had hoped, when the time came to give some entity the authority to set standards and qualifications, Congress took the easy way out and gave that authority to the foundation. And set up the subcommittee, and which at that time consisted of five agencies, I believe. A few months later, they put HUD wasn't on the subcommittee to begin with. HUD came along several months later, and then as a result of Dodd-Frank, FHFA, which is the Federal Housing Finance Agency that oversees Fannie and Freddie and the Federal Home Loan Banks, they were put on the subcommittee, as was the Consumer Financial Protection Bureau, the CFPB. But the third part of the triumvirate of regulation for appraisers was the states. And that's the most normal part of the regulatory system, because most occupations are regulated at the state level, whether it's insurance, whether it's law, medicine, it's all regulated at the state level. For whatever reason, appraisers have really been singled out for an enormous amount of regulation, because the appraisers get it from both the federal side and the state side. So the subcommittees, the foundation was given congressional authority to set the uniform standards, the minimum qualifications, how much education and experience you have to have. They also set the exam. And then the subcommittee's role was one of oversight and support. So the subcommittee has what you think of as more classic oversight of the states with enforcement authority and so forth. Now, what I came to realize was a big problem and hole in the system is that the subcommittee has no real meaningful authority over the Appraisal Foundation. The authority is to monitor and review the foundation, which basically means the subcommittee can write letters and encourage and cajole the foundation to do certain things or not do certain things, but there's no authority to step in and to truly make them accountable.
Interesting. Fascinating. Wow. So what, given all that you've seen and you've learned and experienced through all of this, what are you most optimistic about over the next 3 to 5 years? or looking forward?
I'm optimistic about a lot of things. I think that the appraisal and I tend to want to use the term evaluation profession
Mhm.
has a bright future. But there are a number of things that of hurdles that need to be conquered in order to really bring that future to fruition. We have a huge problem in getting people into the business. I think that that's largely because of the experience requirement that the AQB has maintained for all these years. And but hopefully they will see the light and either get rid of the experience requirement altogether, or at a minimum create another pathway where aspiring appraisers can get their education and then take the exam without having to go through the experience hurdle. By the way, that's what Congress intended. I have a report from 1990 where Congress chastises the AQB for not doing what they intended, which is to make appraisal more like law and the accounting profession, where you get your education, you take the exam, and then you get your experience. And that's been a huge burden on the industry, and it's been a big part of the lack of diversity in the industry, and just an overall screen that doesn't allow people to get in as quickly as possible. Now, how's that positive? Well, the AQB is looking at that now. I think more and more people, including lawmakers, are realizing that this is a kink in the hose that needs to be fixed. And once we can get that addressed, I think that there will be a lot of younger people who are going to be more interested in getting involved. We've got Perea, which the problem with Perea is it's just not scalable at this point. No, we don't need, and I know there's appraisers who would definitely disagree with my viewpoint here, but we don't need, dozens of new appraisers. We need hundreds and even thousands of new appraisers.
Mm.
Well, UAD 3.6 that is rolling out from the GSEs, technically it has been rolled out. There's a lot of concern that a lot of older appraisers in particular are just going to say, I'm not doing this. And it'll be their opportunity to retire. And that's okay. We need new, fresh faces in the business, but we need enough of them that the mortgage industry isn't forced to find other alternatives than using appraisers to get the job done. The country is not going to allow mortgage lending to be impeded dramatically by lack of appraisers. It's just not going to happen. And the last few years where we saw drops in interest rates that led to huge surges in appraisal volume and escalating turnaround times, escalating fees, I don't think the industry is going to allow that to happen again. It happened after Brexit. It happened during the COVID, and I don't think that that's going to happen again. Now, the positive thing here is, as we get new entrants into the profession, they're going to be a lot more technologically savvy. They're going to embrace technology, and that's clearly where this business is headed. Artificial intelligence, we've only begun to scratch the surface. I'm pretty convinced on how it's going to change things. And as we were talking earlier, I think where we're headed is appraisers are going to be, for a long time now, technology, AVMs and so forth. have been used to check the appraiser. And I think going forward, you're going to see more of the appraiser checking the results of the technology.
I get what you're saying.
And, appraisers need to be prepared to, and I've said this to appraisers for 30 years, you have to have a diverse client base. And I think that this is going to force the people who really want to be in the valuation profession to think more about not just relying on the mortgage lending industry, but all kinds of, there's legal work, there's condemnation work, there's a lot of different opportunities in the valuation industry to set up shop and specialize in. Yeah, the valuation of real estate goes back thousands of years.
Mm-hmm.
And that's not going to change. How we do it, how technology is involved is, going to be more and more part of the equation. But particularly in residential lending, the appraiser is, their job is to replicate the actions of buyers and sellers in the marketplace, right? Now, there's a margin involved in that. And anybody who's been an appraiser for any time knows how emotional buying and selling homes, it's where your kids grew up or are going to grow up. It's, where you build your life's memories or where you're planning to build your life's memories. So those kind of decisions are not purely financial, and I don't think they can always be modeled. So the appraiser, there's some intuition that's involved in being a really good, competent appraiser. They have to be able to turn that intuition into, a credible, reliable report that's based on facts and data. But at the bottom line is it's an opinion, and it's an opinion because there is no mathematical equation that tells you exactly what a property is worth. And I think we're a long ways from.
Yep. I think we're a good bit away because there's so much more than just sticks and bricks that get valued, although it's a heavy component to it. There's a lot of nuances and subtleties that are not yet easily captured or available, but that doesn't mean they won't be. And to your point, it creates a very interesting and exciting future.
And one thing that we haven't really touched on yet is that with all of the technology and AI, it is going to breed fraud. I don't think we have even begun to see how the fraudsters are going to be able to manipulate, use AI, use the data that is now becoming more and more available. And I hope Fannie and Freddie will make more of the data that they're taking in available to appraisers. And I think it's going to be really critical in combating fraud. And part of my background and experience has been seeing, just how pervasive fraud can be, particularly when I was at Lehman and during the early 2000s. It's no joke. And the regulatory system, lenders, everybody, appraisers, everybody needs to be prepared to figure out how to root it out and address it. And again, I think that that's someplace where a human being, a competent, qualified, good quality appraiser is going to be invaluable to the financial services industry.
True.
Yeah, ultimately, we're still in a phase where people are going to trust people more than machines. That may change.
Mm-hmm.
But I think when it really comes down to it, when it's selling your home, whether it's financing your home, whether it's providing billions of dollars in financing, you don't want to just rely on a machine that may have some type of flaw in its programming and its algorithms. That's not going to go over well when you're explaining yourself to your superiors or your board or whoever. Having good appraisers who know what they're doing involved is, I think, going to be a critical part of the financial services industry for some time to come, if not, for forever.
Yeah, that's a great point. Jim, I appreciate you joining us, sharing some insightful perspective from the wide-ranging roles you've served in, and at this point in your career. I much appreciate it.
Well, absolutely, Michael. Thank you so much for the opportunity to frankly talk about a lot of stuff that I never get to talk about. My wife's heard these stories way too many times, so so this is great. It's been a real play.
I drove 3 hours one way yesterday morning to get to a eminent domain and condemnation state gathering, and then drove 3 hours back the same night. My wife's like, "What are you doing that for?" I'm like, first of all, it's 2 days, and today, Wednesdays are the day we do podcast outreach and recordings and what have you, so I'm not going to miss that day. But nonetheless, it's because it makes a difference to get together with people and to actually be able to talk about some of this stuff, because gosh knows, my wife has no interest in hearing about it either.
Yep. Well, over in Colorado Springs, I am a docent at the National Museum of World War II Aviation, where we have 29 World War II aircraft that all fly. In fact, there's a British television crew out here right now that are filming these warbirds for a 15 episode documentary that is going to come out second quarter of next year. So,
okay.
So that's where I spend my spare time.
That's amazing. That's wonderful to hear. Having now lived in Chicago for quite a period of time, I spend a decent bit of time going on the various Chicago architectural tours, where there are actually a handful of designated appraisers who also serve as docents. And I have to say, it's always fascinating.
Sure is.
Well, Jim, I just want to say thanks again for joining us. Very much appreciated.
Thank you.
You're welcome, friends. Thanks for joining us. As we committed at the beginning, always an informative, educational, and engaging opportunity to gain some perspective that we would not otherwise have had. Thank you for not only listening and liking and subscribing, but thanks for your generosity and sharing this with others. Every single week we continue to see the numbers climb, and people are like, "Wow, I didn't know you were here." And I'm like, "Well, thank goodness someone was generous enough to share this." So with that, till the next one, have a great, great day.
Thanks for listening to this week's episode of Appraisers, Appraisers on Purpose. We hope you enjoyed learning from the amazing professional paths and achievements of our beloved guests. Before we go, please subscribe on your listening channel, Spotify, LinkedIn, YouTube, and other podcast channels to hear more from appraisers and valuers regarding their life and their work. After you drop a comment below, who is one friend and peer you can generously share this episode with? If you have any suggestions or questions for future episodes, we'd love to hear from you. Just send us a message on LinkedIn and we'll be sure to get back to you. Thanks again for listening, and until we're together again for the next session of Appraisers on Purpose, create the change that you seek.